Almost every retailer is scrambling to get product for the holidays, and it seems as if much of what they want either can't be found or is stalled off the coast somewhere 8 days out in a port. Perhaps a COVID-struck port in China or Vietnam, with the latter complicated by ports that simply aren't scaling. Just today, we got a report from Brokerage House that Nike will likely miss the quarter because of a COVID outbreak in Vietnam. That stock's up 12%. You can't handle that kind of disappointment. Neither can many others. The strange thing is that tech has been seen as a safe haven, and it got bid up all over the place in the last few weeks. But we don't have a substantive reason to keep buying. There is no gold rush in tech. They can only go up so far without new information, and there just isn't any. Tech is the group that has the most to lose going into the 17th. I do not expect a big move up ahead of that seasonal weakness. Only the semiconductors put on a decent show today, although no one I know could figure out why. I mean, I don't trust the semi rally. I think it was just related to Apple's new phone launch. And in the interim, we see a parade of tech IPOs that nobody really wants. They're just saturating all the buyers. But we can't do anything about that, can we? Sure, on any given day, we can see a relief rally. Today, the Dow held up just fine. Some healthcare stocks went higher, chiefly the health insurers. Banks put on a decent show. What do? Just like I have a couple oils, I like Wells Fargo. That's a stock down hard because of a $250 million federal fine for things the old guard did, not the new one. The company's stock lost $20 billion in market cap in anticipation of a much larger punishment. But these made up only a fraction of the decline. I mean, Wells is still a buyer. Now, I don't want to be too aggressive about anything, though, because if that litany of ports, freight, raw costs, overvaluation isn't enough, we got the Democratic leadership trying to raise taxes, especially for corporations, and that doesn't help the bull case either, does it? That said, I doubt they have the votes in the Senate. Oh, and guess what? If we don't have enough wage inflation, they want to create more jobs, but they can't create more people to fill them. I have said over and over again to you that September is the cruelest month. And it's playing out that way once again, with rolling corrections all over the place. Something that is, again, typically a precursor to the seasonal decline that begins in just a couple of days. Something I know traders are going to be buzzing about. Bottom line, right now, you're better off keeping some cash, owning some gold, more on that later. And if you're a trader, maybe you heed the Larry Williams warning. Do some selling this week. If only to get ahead of those who are unaware that September 17th typically kicks off the toughest period of the year.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.